Welcome, everybody. We appreciate you attending today. We're going to get started on time, but first, just a few housekeeping items. Please use the chat feature to ask any questions throughout the presentation. We will have time at the end to address any of them. Second of all, we will be recording this and sending it out, as well as a copy of the slides after the presentation is done. With that, I'd like to turn it over to our speaker, Robert Stevens.
Samantha, thank you. And welcome to my webinar today, ladies and gentlemen. Your time is greatly appreciated. And speaking of time, it's a crazy time to be in the mortgage industry, but the cream really does rise to the top. And, a couple of weeks ago when everything started going, let's just say a little sideways, I started working on some material for a webinar and, just to kind of keep everybody up to speed and remind everyone of what the single close construction program can do. And then, boy, things really turned sideways, and you started hearing that other single close lenders were pulling out of the space. I had a couple of examples of virtually deals ready to close, and the construction lender calling up saying, sorry, we're no longer going to be offering this type of a program. So my format, my agenda for the meeting changed, and I needed to make sure I got out in front of all of our clients to reconfirm our position in the single close construction space. So I don't want anyone to ever feel that they can't contact me directly. So whether that's via email, LinkedIn, or my cell phone number, please reach out, especially now, because we want to make sure we're driving home the point that GSF is committed to this business. And I also know from your chair as the loan officer, as the owner of the brokerage company, as the lender, you have so many things you're dealing with. And now you could possibly be dealing with a home builder that's wondering what's going on, and they need to continue building their home. So not only can they satisfy their client, but their family. I needed to give you that comfort level. So that's really the theme of today's meeting, a state of the union, if you will, on GSF's commitment to single close construction lending. You'll see here what I brought up on the screen. I'm often asked, Robert, what does GSF stand for? I just wanted to give you a quick snippet from our website that you can access at any point in time, singleclosing.com, to get the full history of the company. But in short, I wanted to let you know that Phil and Jim created GSF in 1995, and in 2001, we transformed its business model into what you're all experiencing today. So when you have a moment, I would encourage you to visit our website, again, singleclosing.com, learn a little bit more about GSF, because we truly are committed to this business and creating a long-lasting partnership. So I mentioned that I was previously working on a webinar to kind of bring everybody up to speed with single close construction lending, and then things kind of turned, as it did for everyone here. So not only are we dealing with things from, work, but, with the health crisis that we're all experiencing now. So, things have definitely changed. And again, that was my recipe, if you will, for getting out in front of you and making sure, at least as far as this piece of your life is concerned, we got your back. So I wanted to bring up 4 key points that need to be discussed during times of uncertainty. I want to inform you that our pipeline is healthy and strong. 68% of our business is conventional, 32% is government. Well, you might be saying, well, Rob, that's where a lot of the problems lie today, in that government bucket. And I would agree with you. But I would agree if you added into that, those lower tier credit scores. So as of today, 68% of our business is conventional, 32% is government, and our average government score is 681. So we've already been in the, how shall I say, good area as far as construction lending is concerned. We recently have increased our minimum score requirements on our government offerings to 680, but as this bullet point represents, we're already there. And that's a thank you to each and every one of you on the phone. You're not trying to throw something to the wall to see if it sticks. You're interested in writing good business. And I want to personally thank you for that. Key concept number 2, when leading people through times of uncertainty, you got to connect with your clients, your family. And I brought up a quick example here of something I experienced 2 days ago. I got a frantic phone call. I need your help. My builders and borrowers are ready to close, and the lender I trusted with this business pulled their commitment to single close construction lending. Can you help me? Listen, I know you're probably going to think I'm blowing smoke, but that hurt because I'm thinking about not only could the broker suffer, but the borrower who's been involved with this for 6 months, 8 months, 9 months, whatever the case may be, the home builder, all the time and energy put into getting that deal structured correctly, and now you're going to tell me at the last minute you're not going to honor your commitment? So again, that was another reason why I wanted to make sure I connected with each and every one of you. We're going to guide you through this, right? We're going to come out on the other side. And the one thing that I want to make sure I mention as far as the guiding piece is concerned, now is not the time to nickel and dime over rates, right? Well, I had a deal with this other lender and your rate is an eighth or a quarter higher, just as an example, right? Because believe me, I get those phone calls as well. And I respect the calls. I understand you're dealing with the borrower, but the other lender where you were getting that rate, they're no longer here. So it doesn't matter what their rate was going to be. So my point is, let's not focus on the easy stuff, if you will, right? It's easy to focus on rates. Let's focus on what we can do together to guide your borrower and home builder through this particular period of time. Let's illustrate the fact that this is a solid construction program. Let's drive home the fact that this program provides a long-term interest rate lock. Let's focus on our float down analysis at the time of modification. And I'll help you with that. But I just wanted to kind of put that in your mind that, now's not the time to focus on what other folks were doing. They're no longer here. And I think we need to unite the home builder community and the borrowers interested in new construction. And you need to drive home the point that you are their trusted advisor. And I'm going to help you with that if needed. We need to kind of gather the troops, get back out in the home building community, and drive home the point that these home builders have an amazing option available in this market that guarantees them their money as long as they build the home. We'll talk about that a little bit more, and I'm going to give you some pointers, if you will, on how you can communicate that message successfully to your home builders. So let's talk about, or give everyone, or what I'd like to do is just kind of remind everybody of what the single close construction program is, because then we're gonna kind of peel the onion layer back and discuss the benefits to what the program can do for you and your builder in this marketplace. Well, the first bullet point, it is what it just explains what the program is. It's in the name. It's a one-time close construction loan. There's really two components to it, as you know. You have your construction line of credit, as the home is being built. But the main difference, and I want you to think about this for a second. Think about a large tract home builder that perhaps they have their own mortgage company, right? So we know who has their own mortgage companies. D.R. Horton, for example, Pulte, I believe Lennar does as well. And their business model is somewhat like this. The borrower comes in, picks the house out, model, whatever the case may be. They put down a small deposit. They get pre-approved by that home builder's mortgage company, and then they go on their merry way for 6 months or 9 months. They get a notification, it's time to close, the house is built. What happens? The credit deteriorated, they changed jobs, maybe rates went a little bit haywire, or we're in the market we're in now, and now the borrower is panicking. That builder is sitting with a completed house. That's why I really don't think that's a successful business model as far as construction lending is concerned. If that home builder used this program, they would have had a closed loan before the home was ever built. The borrowers would have kept their level of excitement up, and they never would have to worry about requalifying. So think of the power behind bullet point number 2. After that initial closing, the borrower no longer has to requalify. That's a big deal, as it mentions here. And the other point that I want to bring up, what happens in the case of the single close construction loan closes, perfect closing, got it done in under 40 days. Things go a little haywire for that borrower. They get a job transfer. I don't know what happens. Maybe the husband and wife, they wake up one morning, they look at each other. They no longer want to be married. The heck with the construction loan. The home isn't even started yet. We're gonna walk away from it, file bankruptcy. Well, those are real life scenarios, especially now, folks losing their jobs, things like that. This totally protects the home builder. So look at it from your chair, the trusted advisor in the new construction space. You're providing your home builder this option that when things like this happen, when the market happens that we're experiencing right now, no problem, Mr. or Mrs. Home Builder. I got your back. Your money is protected. Keep building that home. Your draws will continue to be issued. You can pay your employees. Huge. In this market, I don't even think the rate question would ever come up if you just simply drove home this point. So keep that in mind. As far as availability is concerned, we paused our jumbo offering for the next 90 days, and we're focusing on our 4 core products: conventional, FHA, VA, and USDA. I want to take a second and just remind everyone, we're one of the only, I think we're probably, I'm thinking about it now, going through my mental checklist here on the notifications I've gotten from other lenders that have pulled out of this particular space. Our conventional option is a 95% loan to value. Huge. If you were to look in the Fannie Mae guides as of today, the single close construction option caps out at a 70% loan to value. And if you go above 70, you need to requalify the borrower prior to modification. Could you imagine? The loan's already closed and now you're requalifying a borrower? That's a nightmare. we have a direct exception with Fannie Mae to go to 95% on our conventional option. Of course, especially in this particular market, gives your builders an opportunity to expand their marketing footprint with the security that they're going to get paid. Obviously, this is a no-brainer. It's a one-time closed loan. It's only one set of closing costs. I don't know if that would be too much of a concern in this particular market right now. Obviously, it's definitely beneficial to mention, but focusing on the no requalifying, the marketing that the builder can do in their marketing footprint, the fact that the builder's money is always guaranteed, it's a big deal. I'm very proud of our roadmap to success. I know that might sound a little salesy, but for the folks that I have talking to or been on the phone with, and I've spoken with in the past that are on this call right now, at some point in the conversation, you'll hear me mention we never use a third party. So for those of you who aren't 100% familiar with what I'm talking about here, let me explain. There are certain aspects to the single close construction loan where other companies, perhaps they're no longer offering this option, they would use a third party to vet the home builder. They would use a third party to calculate the budget. And in my opinion, the kiss of death, they would use a third party to manage the draws. So now you're a broker, you're a lender, the loan closed, your builder needs a draw. Now that builder is calling ABC processing company to try to get their money. It's terrible, kills the relationship. We never utilize a third party. Everything is handled internally by GSF. I'm going to bring up 3 steps, 1, 2, and 3. This is it, ladies and gentlemen. This is what you have to do to properly structure a single close construction loan. We want the builder vetted first. We'll supply you the vetting package. I will spend time with you and the builder on the phone if necessary to help you sell the deal to the builder and bring home all of these points that I was just mentioning. So let me just be clear. Any step during the process, you're never alone. We're very easy to access. But we need to vet the builder first because we don't want to get 30, 40 days into the credit side of the file with the borrower, and now all of a sudden the builder's got a skeleton in their closet and it prohibits us from doing business with that particular builder. Well, let's just get that taken care of up front. So builder acceptance, done. The budget comes next. Let's calculate the numbers so we know what we're dealing with. The contract between the builder and the borrower gets executed at that point. So what do you have now? You have a single close construction loan, fully structured, and now that just kind of resembles a regular purchase transaction. That's fantastic. You have to look at it this way, because if you start thinking about the other steps that come behind the scenes, you might confuse yourself. And I don't want you to worry, step 4, step 5, step 6, step 4, that's what you're used to with all of your business, right? Closing, okay, obviously we need to close. Draw administration kind of circles back to never using a third party. This is the recipe for success with this business. That's why we're still here. And this is why this is all we do. Remember that, ladies and gentlemen. We only provide single close construction lending. We're not trying to be the jack of all trades. For those of you that are connected with me on LinkedIn, I apologize that you have to watch all of my videos, but I have become obsessed about communicating what we do best with single close construction lending. With that being said, a lot of those videos I add to my video library. And there are others in there that I've never posted on LinkedIn, but they address objections, right? You know, well, why is that rate a little bit higher than a regular purchase rate? You know, can I utilize lot equity? And I answer a lot of those questions in 1 to 2 minute videos. My resource page, that gives you every form, every document you need to be successful. And by the way, I'll just flip back for a second. These, the first 2 steps, builder acceptance and the cost calculation step. Well, builder acceptance, that's a package that you need for your builder. Cost calculations, that's a 1-page Excel document that you need to fill out. By the way, we'll have a separate call or a one-on-one, whatever you need to explain to you the best way to handle these 2 particular steps. But I just wanted to mention the builder acceptance piece and the cost calculation step. Those forms can be found on my resource page. When in doubt and you don't know what to do, you can always email my scenario desk. A lot of my team, I would say a good majority of my team, we've already worked from home. We're remote to begin with. So it's plug and play for us. We have a fantastic service level commitment with this program. Even now, as the business is increasing, our builder vetting times, that's extended a little bit, but we'll try to get that done for you within a 15-day window. There's references being checked. There's things outside of our control that we wait on, you know, again, references, etc. But we'll always keep you in the loop in terms of what's happening. The cost calculations, I have heard that for some of the folks that utilize a third party before they pulled out of the business, it would take a week to 10 days to get numbers back. 2 hours, 4 hours for us, usually within 2 hours, but give us a 4-hour window, you'll have those numbers back. That's a big deal, ladies and gentlemen. It allows you to sell this program with a level of professionalism. Always remember that. I'm going to close with what I feel GSF and my entire team possesses as far as being a trusted partner in this space. And I need to make sure you all have that comfort level that we know what we're doing, but we're supporting you, especially during these times. So number 1 trait of a trusted partner, we understand your business. Well, that's obvious. This is all we do. I believe we are excellent at what we do. Turn times will prove that, and the fact that we are here supporting your efforts just solidifies that. We understand we got to work together, right, folks? However that may be. There might be a loan officer on the phone right now. You know this program inside and out. You can sell it to a home builder blindly. You got it done. There might be somebody else that's excited about really developing this business, but you're not quite sure how to kind of kick things off. Well, I'm going to work with you on that. My team will work with you on that. Do we have your best interest in mind? Well, we're here right now giving you that comfort level that we're not pulling out of this space. Communicate in a timely fashion. I'd like to think we do a good job at that. You know, there's probably a couple of folks on the line right now. You might be rolling your eyes a little bit at me. Hey, Rob, I left you a message. You know, you didn't call me back right away, whatever the case may be. Well, for that, I do apologize. But sometimes, you know, it may take an extra day, but we always have alternative ways for you to communicate so you don't feel like your calls or messages are getting ignored. If I don't call you back within whatever you feel is a reasonable amount of time, shoot an email to my scenario desk and copy me on that. We'll make sure you're taken care of. Am I delivering what we agreed upon? I would challenge anybody if they said no. We are a single closed construction lender, and while everybody in this particular space basically have pulled out, we're here, and I'm reiterating, business as usual. Are we clear? Do we set, when I'm referring to project goals, did I paint a clear picture on how you structure a single closed construction loan? I'd like to think so. Can we be reached during an emergency? You know, do you have a builder that's ripping your head off because the previous construction lender couldn't make a commitment? They need questions answered? Absolutely. Again, if I fail to return your call in a timely manner, my entire team is there to support my efforts. Of course, we're willing to be a resource. What does that mean? Does that mean getting on a conference call with you and your borrower and kind of calming them down and having a good question and answers session? Does that mean helping you sell this program to your home builder? Absolutely. More than happy to do that. There's many of you on this call right now where I have visited you in your marketplace, and we've spent the day together visiting home builders. So yeah, I think we are willing to be a resource, and we're here to help you. And I'd like to think we're respectful and trustworthy. We certainly know what you are up against, again, in the crazy times we're in. I want to thank you for your participation today, carving out a little bit of time to spend with us. My number one goal was to give you a comfort level that you could sell this program with confidence. And I wanted to paint a clear picture that we are here and what our position is as far as this commitment. You're all going to receive a copy of this presentation. If you haven't linked up with me on LinkedIn, I encourage you to do that. So Samantha, I'd like to kind of turn things over to the chat box. I've seen a few questions come in, but I've been focused on the presentation. What do we got?
Yeah, we have a few questions. I'll just go in the order they came in. The first one is, what happens after the construction loan closes if the borrower loses their job?
Great question. So yeah, so let's just look at what's going on right now. So construction period is done. The loan is modifying to permanent financing. The borrower finds himself without a job. Well, we're not going to know about that unless the borrower brings it to our attention. But in the event they say, hey, listen, I can't make this mortgage payment, we are not circling back to you. We are not circling back to the home builder. That is for GSF to provide a workout for that borrower. Now, that doesn't mean there might be a situation, I don't know, where we may have to call you as the originating lender or broker just maybe for assistance. But yeah, that's not your responsibility. That's our responsibility to manage through that process. Again, another great reason to market this program to the home builder community.
Great. Another one came in wondering if you could address the limit recently placed on high balance VA. Any chance that will be lifted soon?
I'm not going to say soon, but I will say absolutely. Once the market stabilizes and, we don't have, I don't know what you can call the rate sheet today, right? The rate sheet's all over the place, up, down, sideways, 4 or 5 different price adjustments during the day. There's really not a tremendous amount of stability in anything above 510,400. but absolutely, that's our space. So, you know, once we have a stable period of time, that'll definitely be increased.
Okay, great. Another one came in earlier, are there any changes to the program?
The only change to the program is on our, well, two changes, if you will. We've paused our jumbo option, right? So for the next 90 days, jumbo is on hold. And as far as our government offerings are concerned, FHA, VA, and USDA, we've increased our minimum score requirements to 680. As you may remember in the beginning of the presentation, I mentioned our average credit score on our government business was 681 to begin with. So in order for us to successfully keep offering the government options, we needed to tighten up a little bit on the credit requirements. Fannie is still at 680, business as usual after that credit score increase.
Great. Another one was, is there a float down at the end when the project is done?
Sure. So we used to charge for a float down option. The market was really stable at that point in time. And if the borrower was inquiring or you as the loan officer wanted to use it as a sales feature, absolutely, yeah, we provided a float down at the time of modification. And I believe we used to charge 25 basis points for that at the time of the lock. So now we removed all of that. All four of our options come with a free float down analysis at the time of modification. And let me just spend an extra second on that because, you know, we from time to time, we'll get a little bit of pushback, right? Because if you're a borrower sitting on your couch right now and Quicken Loans flashes across the screen and you can get a 30-year fix for 2.5%, and now you're getting quoted on a single closed construction loan for, I still find it hard to believe people complain about 4%. But there's a scenario, you know, you have to explain what's going on with that, right? It's a long-term lock. We don't know where the market's going to be in 9 months when the home is completed. So we, as the lender, we're assuming that risk as far as the rate is concerned. So that's why your rate's going to be a little bit higher at closing. But we also don't want to stick it to the borrower at modification. If rates have come down, yeah, we will gladly discuss with them what their float down options are, no charge. Let me be clear on that. So there's no charge for that.
How long do you allow for the completion of the property?
9 months after the construction loan closes.
Another question is, have you seen builder supply chains becoming an issue? We have heard builders are beginning to have some trouble getting windows, etc.
Yeah, I mean, that's going to be, you know, it's going to be specific for a particular market. You know, for example, I happen to live in Southeast Florida. When hurricane season rolls around, you know, there might be a high demand for lumber, right? So it's going to vary from market to market. We'll discuss that on an individual basis. But has anything been brought to our attention? Not at this point in time.
What is your average turn time? I see you do not do condos. We sometimes have single condos because they are on the beach area and have to be classified that way. No HO association fees.
Right, so single family residences only, the borrower must own the land. So with a condo, the borrower, there's no land ownership. So single family structures, manufactured, modular, traditional construction. Not a manufactured home that looks like a log cabin on the outside. Save yourself the trouble and don't field every type of scenario that a borrower calls you with. Oh, I got a container home. I got a dome home, you know, pole barn. Manufactured, modular, traditional construction. Then again, the reason why we can't lend as far as condos, even if it is a single family building, one building, it's the land ownership. Did I answer that question, Samantha? Was there another piece that I'm missing?
Yeah, it was two questions. At the beginning was, what is your average turn time?
Oh, okay. So what I always like to say is after the builder has been vetted, because again, that could be a large moving piece, right? We're checking references. If the references are not calling back, we may need a little bit more time. So when I quote my turn times, I always say after the builder has been vetted, you should be at the closing table in under 45 days.
Okay, great. We've had quite a few come in. So the next one, and keep sending them in. If your buyer defaults during construction, will builder finish and be paid out without delays?
Yes.
Okay. Any update on pools?
Not at this time.
Okay. Let's see. Let's scroll down.
And Samantha, let me circle back for a second. As far as if the buyer defaults, so with our government options, we do calculate an interest reserve that gets added into the transaction. We may have to work something out on our conventional option because the borrower is required to make an interest-only payment during construction. So that, you know, if the borrower is not making the interest-only payment during construction, we'll continue to pay the builder out, but we may have to figure something out with regards to whatever that interest that was due during construction that the borrower failed to make a payment on. So I just wanted to throw that out there. We'll work it out so it's beneficial for your builder, meaning the builder will get paid. We just might take a tiny bit longer on conventional due to that interest-only payment.
Okay. Does the builder have to have a certain amount of volume?
Love that question. So one of the things that we're going to provide you back when we send this presentation out, I'm going to put a package together for everybody. So we have this presentation. I mentioned the scenario request form. I mentioned the builder application. Pay attention to our needs list on the builder application. We need experienced home builders. They can't be, Johnny the fireman during the week, which is a noble job, and no way am I knocking Johnny, but now he wants to build homes on the weekend. That's not going to work. The market's changing. So the guy who is just renovating homes, and he's doing a great job at it. He was it was fantastic working with the home style program or 203K as far as renovation lending is concerned. And now they want to switch to, ground up construction. That's not going to work. We have to have full-time home builders committed to their craft, a minimum of 3 years experience, and we're going to check references, both completed properties as far as home buyers are concerned and financial references.
Do you require your own title company?
No.
Okay. May we lock at any time so we are able to secure a rate price for our buyers? Or do we have to wait until certain things are in for a particular file, such as appraisal, project approval, etc.?
So you can lock within 60 days of the construction loan closing. My suggested best practice, allow the loan to pass through underwriting first so you know what conditions you're dealing with. Because especially in this market, I don't want you to have to be faced with a relock where now the market had a severe mood swing overnight and now you're faced with a less than favorable rate and now you got a relock. So again, suggested business practice, allow the loan to pass through underwriting first so you know what conditions you're dealing with, and then go ahead and lock. And it's a 60-day lock. We need to have a valid lock on the day of closing.
What is the formula for the float down? Prime plus what?
No, so their prime is not involved with the float down. Prime is only involved during the construction phase of the loan. So the construction interest is calculated at prime plus 1.25. That, even though prime is subject to fluctuate, we do lock that in. So whatever that calculation may be, when the final cost calculation is prepared, we do lock that. I mean, we're not providing the borrower like an official lock-in form. We just leave the calculation at that particular dollar amount. You're locking in what you as the loan officer, you're locking in, you know, their regular rate, like if they were, you know, moving into their home in 30 days. As far as the formula is concerned, we don't, you know, we don't have a particular formula where, you know, before where we used to charge a quarter of a point for the float down, and then it had to move a minimum, I think it was either an eighth or a quarter in order for the borrower to get the lower rate. No, we're providing the free float down analysis at the time of modification, and we will do whatever we can to make sure that the borrower is happy and satisfied. Look, we can't have these loans running off at the time of modification. This is all we do. I said that, you know, in the beginning of the presentation. So, and again, another benefit of handling everything internally, that draw administrator is building that rapport with the borrower and the builder all through construction, and then they're handling the modification when it's needed. So it'll be discussed at that point in time based on market conditions, and we will do whatever we can to make sure the borrower is happy.
Great. Are you still doing HUD code and mod code manufactured homes?
I knew there'd be a curveball question in there. How many minutes did I make it, Samantha, without having to stumble a little bit? So I believe the answer is yes. I need to make sure nothing has changed as far as that's concerned. We'll have to circle back. If you can make a note of that, Samantha, I'll make sure they have an answer quickly.
Great. You had mentioned we don't know what the rate will be in 9 months. So do you close after the house is built out or prior to it being built?
No, prior to, so you're closing on a vacant lot, right? I mean, that's what our program is intended to do. And the single close construction program allows the borrower to purchase the lot and finance the construction project all in one loan. It's one closing in the very beginning.
At modification, if the owner elects to refi elsewhere, is there a penalty recapture to the originating lender?
So the technical answer is yes, but we have procedures in place to do our very best to make sure that does not happen.
I believe this is a follow-up question regarding the condos on the beach. They do own the land.
Okay, so then it wouldn't technically be defined as, in my opinion, it's not defined as a condo. I mean, if it's a single family structure and it fits FHA, VA, USDA, or Fannie Mae guidelines, that's something we will certainly entertain. And again, because we handle everything internally, that'll be a very quick answer after we review the plans and specs. I just did one yesterday, as a matter of fact. I had somebody email me over plans and specs on what sounded like it was going to be a unique property. Unfortunately, the answer for this person was no, but I got them an answer in 10 minutes. So they were able to get back to their client quickly. You know, vacation types of properties, this is a primary residence loan only. Fannie does allow for second homes, but you know, for some reason, you know, from what you're describing there, Samantha, that seems like it would be a no, but we are more than happy to review that with a quick email of the plans and specs.
Okay, great. Will you take appraisals from previous lenders?
We'll review that on a case-by-case basis.
Okay. I have a few more questions, so we'll keep going for a few more minutes, and if we don't get to anybody's questions, we will follow up. Is this loan only for stick built? Can we do this loan for modular or mobile?
Manufactured, modular, and traditional construction.
Okay. Will you provide a previously approved list of builders so that we can determine a national or regional builder that you have already approved but has not served in different markets?
Okay, so I get that question a lot, right? It makes sense. Why wouldn't we send our builder list out, you know, so the lending community can market to those builders? But, you know, one of the points I brought up earlier, you know, was respect, right? I respect these relationships. I respect the relationships that I have with everybody here. So, you know, if I have a builder submitted to me from company A, and that's company A's client, but now company B comes along and they want to market to company A, well, that, or, you know, that company A's builder, that wouldn't be fair to company A, right? That's their client. So what we do, if you have a builder list of builders in your marketing footprint, we'll quickly cross-reference it against our database. And if we've already done business and that builder's been fully vetted, the need for the builder vetting package, you won't have that. You may need to get an updated license or something like that, but yeah, a little bit of a long answer to that question, but I wanted to tell you the reasoning behind the no.
Is PMI or MIP collected during construction?
No.
Okay. At modification, can borrower bring in funds to get rid of mortgage insurance?
Great question. As you can imagine, I get that question a lot. So what it really ends up boiling down to is, you know, if you have a government loan, that part doesn't matter at the time of modification, right? Will we allow a principal balance pay down? We will, but the loan will not recast, so they won't realize that reduction in their principal and interest payment. As far as our conventional option is concerned, they can't make that reduction at modification, but once we have the loan booked in our servicing department, then the borrower can apply for a recasting, and then they would discuss that with my servicing agent at that point in time.
Okay. And I'm going to skip because I believe this is a follow-up question regarding not sharing the builder list. So with your response in mind, would you protect a lender-builder relationship in a specific market?
Okay, so let me just kind of paint this picture. So lender A is rocking and rolling with a particular builder, and now lender B comes in with a deal from that builder. Well, I can't control that, right? So if the builder called the other lender, I'm not going to stop that business from coming in. You know, as far as that lender A relationship with the home builder is concerned, that's for you to manage that relationship. You know, I don't know any other way to answer the question. If the deal comes in, I don't know how it got from the builder to the other lender.
Two more questions. What is the early payoff period to avoid recapture of commissions paid to the LO broker?
So the EPO, our standard EPO in our agreements, 6 months, but we're increasing that, as many lenders are, to a 12-month period. That's from modification. But, you know, we'll do our best to work with you. And that's my answer on that.
We'll have this be the last question. We have site condos in Michigan. They are SFR, where the borrower owns the land. The VA sent out a letter stating that they should be treated the same as other SFR.
Okay, so on something like that, I would answer the question the following way. If you need an immediate answer to get back to your home builder right now because they're signing a contract, the answer would be no. It's just, to me, that doesn't sound like a property that we would be able to work with. Now, if you have 24 hours, send me the plans and specs. I'll have it reviewed and make sure we do whatever we can. If we can say yes, we will. But something like that, I would need to have that reviewed by my builder department.
Great. We'll wrap up. If I missed your question, I apologize. You have Robert's contact information. Please reach out to him directly. I want to thank everybody for attending. Thank you, Robert, for presenting. And we will get out the recording and PowerPoint slides along with any additional follow-up as soon as possible. Thank you.
And Samantha, I just want to take a quick second and just say thank you for everybody joining today. And remember, I will help you develop this business, but what we need to do is to communicate clearly to the home builder community that this is an amazing option. And I also want to, it's not often I'm able to speak to this many people at once. I want you folks to think about those large tract home builders. Now would be a great time to be making a sales call. Walk into a DR Horton office, walk into Pulte, walk into Lennar, KB, right? They have all had closings fail in the last 60 days because the borrower could no longer qualify. If they would have offered single close construction lending, they would have closed up front, everybody would have gotten their money, and now the builder would not have a completed house on their line with jacked up options because they allowed the borrower to make ridiculous decisions, and now they have to retrofit the house and try to sell it. Keep that in mind. Thank you, everybody. Have a great day.